Good morning and welcome everyone to Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, talk about Indian equities set to scale record highs on penultimate session of F&O expiry, on the way perhaps to clock the fifth or fourth consecutive session of gains coming in for the Lal Street. Gift Nifty suggests a positive start, at least about the 21,500 mark, up with modest gains to an extent of 0.2%. Talk about Wall Street, it ended in higher in the final stretch of 2023. Rate cuts, of course, are in view, but the expectation that Federal Reserve will begin cutting interest rates as soon as March essentially has buoyed in the sentiment. Talk about Asian shares, well, they've risen with the year-end cheer tracking Wall Street rally. They've also been tracking, investors are latching on to the year-end optimism driven by expectation that Fed could begin cutting rates as early as March, of course. FIIs, net sellers, but the amount is minuscule there, 95 odd crore, nothing much to read on to. DIIs have bought equities to an extent of 167 odd crore. What we have in terms of F&O Qs, well, if you talk about the FII data, they've been the net sellers in index futures. However, they've been the buyers in index option. Along with that, they've also been buyers in Bank Nifty options. So that's something that you need to watch out for. In terms of index Qs, what we also have is what is in the ban, right? New in the ban is RBL Bank. What still remains in the ban is National Aluminium Company, Balrampur Chini, Delta Corp, Hindustan Copper. What comes out of the ban is Ashok Leyland, India Cements and SAIL. But that's all that we have in terms of the setup. But do remember, it's the penultimate session of the F&O expiry. We saw some amount of intraday recovery that took place in the yesterday's session led by banking and IT stocks. On back of that, some amount of momentum, of course, is expected in today's session too. But how will that play out? Let's actually find the answer from Ajit Mishra, SVP Technical Research at Religare Broking. Morning there.
Good morning, Nickey.
Straight up to you, Ajit, what do you make out of the start, immediate support and resistance levels for Nifty and Bank Nifty?
So, Nickey, we are seeing the fourth successive session of recovery. Recovery in sense that last week in the middle, we saw that index slipped sharply lower from the record highs. And the last three sessions, we have covered most of the damage. But now we have reached closer to the immediate resistance area, that is around 21,500 levels. So, being the monthly expiry also around the corner, we expect this level to hold. So, initial uptick in case if we see, we doubt that's likely to sustain. So, the higher end, close to around 21,525 to 21,600 zone is likely to act as a strong resistance area. So, in case if you are holding long position, at least in the index, one should look for booking profits around those areas. And wait for an dip around, let's say, 21,390, 340 zone to re-enter. Banking, we feel that...
Ajit, just give me a second. Let me address in the market open. And we're going to come back to you. We got your strategy on Nifty 50. We're going to come back to you and check with you what's the strategy on Bank Nifty. 21,500 mark, about that level, 0.4% of gains clocked in on that one. Talk about Bank Nifty and the PSU Bank Index before we go on to the broader counterparts. Bank Nifty also is doing well in trade, 0.3% of gains locked in for that one. PSU Banks is something that we'd like to watch out for. Of course, some amount of euphoria also for this one. Mid-cap and the small-cap indices, essentially, if you can pull that up just to see if there is an outperformance coming in from those broader counterparts. Clearly, the market seems to be right now in a fine fettle and we're seeing some amount of gains. Just in line, we anticipated top gainers and the top losers that we have before we toss our conversation to Ajit to start off with the levels. But Tata Motors, ONGC, Infosys, these are some of the top gainers that we have. DV's Lab, Ultratech Cement and Power Grid. These are some of the other gainers apart from Adani Enterprises, UPL and Bajaj Finserv. Let's talk about top losers there. Well, some amount of weakness is perhaps expected in auto names along with HDFC Bank. Look at the list. Hero Motor Corp, Sun Pharma and HDFC Bank. Along with that, Apollo Hospitals also is one of the top losers. But Ajit, I'm going to come back to you and ask you your strategy on Bank Nifty now and what do you make out of the current stance?
So banking also is largely trading in tandem, but of late we have started seeing a mixed trend within the private banking space, which is capping the momentum as of now. So we feel that until we decisively reclaim 48,000 mark, this consolidation might continue with 47,300, 350 being the lower end and 48,000 being the upper end. So within the banking space, we feel that private banking measures should be preferred. So stock like Kotak, wherein we are seeing consistent buying interest, then we have seen decent profit taking from the record highs in ICICI and Axis. So that can also be considered.
Okay, those are some of the stocks that you can consider. Of course, Ajit, I'd want to chat with you about HDFC Bank essentially. That's one counter perhaps which is one of the top losers after the run-up that we've seen. What do you make out of an HDFC Bank? Essentially, it seems like a very silent candidate of a re-rating potential out there, but that's of course on the fundamental side. What does the technical chart suggest?
So exactly, it means since 2021, we have hardly seen any meaningful gains in the stock. It's been hovering in the broader range, 1250 to 1680, 1700 on the higher side. So we are trading closer to the upper band of the same. And the way we are seeing that buying interest emerging in the private banking majors and specifically from the FI desk as well, we expect these levels to hold, and finally we may see the breakout in the coming weeks. So from the very short-term perspective, we feel that's a normal breather that the stock has been, taking as of now, because we have hardly seen any price-wise correction in the last 3-4 trading sessions. So it's definitely a positive, pattern that's been forming. And as a trader, I feel that until we break 1660, one should continue to look for accumulation in the stock, and the immediate target could be close to around 1710 to 1740.
That's the range perhaps that you need to watch out for. HDFC Bank right now, perhaps a bit of profit booking there, but also there are a couple of listings there. Ajit, your top recommendation for the day, if any?
Yes, so both the recommendations are on the buy side, considering the market tone, and both are index majors. So Asian Paints, basically the first name on the list, a consistent performer within the paint space. And after spending nearly 2 years under a broader consolidation range, we are finally seeing meaningful buying interest. The stock has been inching towards the upper band and is likely to witness a breakout also soon. So from the very short-term perspective, we feel that 3480 is something that we are eyeing as a target. So traders can accumulate around the current levels with 3330 as a stop. And the other name is from the defensive space, Cipla. So the entire pharma space is buzzing, and Cipla, it has formed a very strong base around record high, and we have already seen a move in the other pharma majors, and we expect Cipla to also resume the trend. So 1290 is what we are eyeing in the near future. So with stop at 1220, one can buy Cipla also at the current levels.
We're just going to leave it at that. Thank you so much for taking out the time and having this conversation with us. I'm going to quickly address the stocks and news before we go on to the fundamental side and talk to Prakash, Diwan, of course. But 3 things that I'd like to highlight before we start off the conversation with Prakash, Diwan. First, of course, I'd want to talk about Kansai Nerolac paints, where the board has approved in a land sale to Etheon developers. The location, of course, is Lower Parel, and the sale amount is to an extent of 726 crore. That's the agreement signed between the two companies. So Kansai Nerolac paints is something that you need to watch out for. Zydus Lifesciences, that's another one, and also a crucial one that we're looking at. There is an income tax department demand to an extent of 284 odd crore. Assessment year, of course, is 2023 to 2024. And, the source, of course, it's on account of the processing of tax returns. Now, the company expects that there is going to be full deletion of this particular demand upon rectification. So keep an eye out on Zydus Life. That's the one that we need to watch out for. Indiabulls Housing Finance, an interesting development coming in there. Matthew Kyrie, the former Blackstone India co-head, has essentially picked up 0.5% equity from on Indiabulls Housing Finance. That's the one that you need to watch out for. Perhaps doing well in trade, 2.5% uptick there. Of course, a 0.5% stake at an average price of 213 per share. Right now, it's a bit discount, but of course, the name matters, right? Interesting Brokerage Take. What I'd want to talk about is Godrej Consumer Products. That's clearly the stock of the day. If you talk about ICICI Securities, it's come up and upgraded the counter to buy, and the target has been revised to 1,260 from 1,050, while the stock currently is scoring at 1,100 level. The focus is on market beating UVG driven by category development, and of course volume market share also continues to gain. Fast growing categories have double digit volume growth potential. They've also spoken about Indonesia growth trajectory, which is improved with multiple initiatives, and build on to that EBITDA margin estimate to approximately 25% in the next 2 to 3 years. That's the thing. That's the stock that you need to watch out for. Protean e-Gov. Well, it's essentially a governance company that we're talking about, just listed, newly listed. It's a long initiation there. Target is to an extent of 1,500 rupees, and essentially the brokerage calls it a play on digital India initiatives. So 2.5%, 3% odd gains coming in for that one as well. But that's all that we have when it comes to stocks and news. Of course, we're going to be talking about the new listings also. But let's bring in Prakash Diwan, market expert. Morning there, Prakash.
Good morning. Good morning, Nickey.
I'm going to start off by asking you, there are 3 listings essentially. RBZ Jewellers, Happy Forgings and Credo Brands. Of the 3 IPOs, which one are you expecting maximum premium coming in from, and what do you personally like?
So, to be honest, IPO listings are just a very, very simple guessing game these days. Given the kind of oversubscription that most of them have witnessed, it's extremely difficult to, evaluate from a pent-up demand that would come in once the listing happens. So I would believe, some of them will have to be looked at from a slightly medium term and not just an immediate listing pop to kind of evaluate whether you need to have them in the portfolio, continue to have them if you've been lucky to get an allotment. So from that perspective, I think Happy Forging is what stands out in my understanding of the core business being very robust enough, and from a valuation perspective also, it's been not as astronomically high as some of the other names in the recent past we've seen IPOing. But the Credo Brands script is something which will take time. We've seen how some of the other players in that same category struggle to establish themselves after getting listed. So consumer sentiment is very fickle, and it generally doesn't translate immediately in a very correlated way onto the bourses. So, you can't kind of have a brand that does well immediately showing that on the stock as well. We've seen that with some of the other names. So I would like to kind of keep myself away from that. The only one that I really would want to stick my neck out with is Happy Forging, provided, as I said, it doesn't kind of list at a rate which is unreal in terms of valuations.
Sure. Also experts around, there is a Moneycontrol article that of course we've written where it suggests that there could be a 27% premium coming in on the upper band of the price band, given the issue was subscribed in 82 times on the final day, retail category bought in 15 times, and the net worth individuals, HNI essentially, got in 62 times of the allocated quota, or bidded in 62 times the allotted quota. But I'm going to go back to Prakash and check with him. What does he actually make out of HDFC Bank and few other banking names? Yesterday I was talking to someone from the fund side, of course, and they suggested that they're bullish on everything, on all the financials, barring banks, where they see a lot of competition, perhaps pressure on the margin profile, cost to income ratio thereby. How do you view the entire banking sector right now, and also HDFC Bank, which is the top loser of the day today?
So, Nickey, that's an interesting pocket. If you look at the underlying growth in most of the sectors, we've had a start with the old economy names. We had cap goods, oil and gas, autos. And then in recent times, we've, of course, had the PSU-led charge on the markets. Now, if all of these indicate some sort of a improvement in the underlying sentiment in the economy, I don't see any reason why financials cannot participate or cannot leverage on this opportunity of growth. And if you see the kind of net accretion to our GDP, which has happened in calendar 23, in spite of all those challenges of high inflation, high interest costs, things like that, it is very clear that banks will actually end up having to maintain the kind of NIMs that they've managed. And remember, in a high interest regime, usually the margins are better because the cost of funds may not be as high as the lending rates calibrate themselves. And specifically on HDFC Bank, I think it's probably the most undervalued, large, promising bank that you have. In the private sector, you have a lot of banks that could vie for attention with, it's Kotak, IndusInd, Axis, ICICI, and all of them have something or the other going for themselves. What's going for HDFC Bank is low cost to income ratio, a very high growth trajectory after this digitization adaptation that they've done in the last couple of years. And remember one thing, you have the ability to cross-sell so many of these things to HDFC Limited, customers of so many years. And they've probably not been yet approached by HDFC Bank with all the product suite that they can offer. So I think, at a price to book multiple, which is less than what FY19 used to be for HDFC Bank, there is no reason why it cannot deliver. The only thing is it's not going to be a linear growth. It might consolidate for some more time at the 1600 zones, 1600, where was 1700 zones, and then, catapult itself into the 2000 plus zone probably after March. So you'll have to wait for it. It's not going to participate in the rally every day. Even if the bank Nifty goes up, it could be actually in spite of HDFC not participating. So there could be those days which can confound people. But my simple suggestion to investors is, if you don't have HDFC Bank yet in your portfolio, though we've been talking about it for so many decades, why it's such a sterling addition to the portfolio, this is the time to buy it and sit on it. It's not something which you're going to trade on it. You will have to build your portfolio with some very rock solid foundational stocks, and HDFC Bank definitely will stand for that. So I'm a believer in the fact that time heals things. This whole marriage that they had, while it was a very nicely arranged, thought of marriage, it is a fairly large institution that they've created, and it takes time for it to kind of start working nimbly in terms of growth. So give it some time. Maybe post-March, things will look very different.
I like the way you've put it. A marriage that is arranged well, and apparently it takes time to kind of show the results. Perhaps March is when we start seeing out the numbers, perhaps coming into the terms of trickling into the financials. But what do you make out of the cement manufacturers? Looks like that's the space that clearly market has ignored thus far. Nomura has come up with a report. It's upgraded Ultratech to buy, Dalmia Bharat also to buy, and apart from that, there is an upgrade which has come in for Ramco as well. What do you make out of that? Cement is typically, you think, much avoided or let's just say ignored sector for 2023, and something that you need to watch out for in 2024.
So yeah, that's a very valid question, because starting of 23 calendar 23, Nickey, we actually had a bit of a aversion to cement stocks, given this expectation that consumer demand was yet to pick up. Infrastructure growth was not kind of the same pace that everybody had penciled in. And remember, there's this huge consolidation that the sector has undergone. You've had two of the largest names coming together. You have Ultratech acquiring businesses like nobody else has done. It's way ahead in terms of capacity than its second peer player. So, what's happened is the big have become bigger. And for some reason, because of raw material shortages and constraints from an environmental perspective, the smaller ones aren't able to grow as rapidly, though they might probably be in a sweet spot in some of the regional markets like the South and all, where demand has been strong. But what's working for most of these larger players is that they will start getting pricing power back, which was missing, primarily because the raw material input costs have come down, whether it's coking coal, whether it's clinker, whether it's transportation costs. So, when crude remains soft for such a long period of time, which it has in the last, let's say, 6 months, barring the last couple of days, given the turbulence in the Red Sea, but otherwise crude has been much softer than what we had anticipated in the start of the year. And that means that all cement companies will actually end up having very decent margins when they clock the full year performance. So you will start seeing that. but a lot of it is getting penciled in. I mean, today's report from Nomura actually is kind of put the whole the sector on fire. You see anything and everything that's related to cement going up. But the primary reason is actually there's huge buildup in housing inventory. Housing, remember, takes up almost 42% of cement production in India. And the rest of it is infrastructure, which is also at a boom phase. So if all that kind of, were to be factored in, I don't see any issues with absorption of these huge capacities that are being built up. And very few greenfield projects have come in the last 5 years, which means that the existing capacities will be, the promoters will be able to sweat those more. So good times ahead, but you'll have to be very, very choosy given the fact that valuations are at probably the closer to the higher end of the band. We kind of like some of the mid-sized names. Dalmia Bharat has been one of our old-time favorites. It's already rallied hard from there, but I think it still has some legs to go in that rally. And then you could probably have some of these names which could be potential M&A candidates. I'm not saying that there is any likelihood, but what's happened to Kesoram and all, there could be something where, let's say, an Orient Cement could be looked at. So there are these one-offs in terms of special situations, which could give you a slightly better alpha opportunity. But otherwise, I think as a sector, it's still got legs, provided you buy in at lower valuations.
Well, the sector seems to be doing extremely well in trade today. Talk about Ambuja, talk about ACC, talk about Ultratech Cement. All of them are up and about with gains of more than 2% Prakash, I'm also going to touch base with you on what do you make out of the power industry right now and the names that you'd want to suggest for 2024. Would it be more towards the PSU power companies, which thus far have been the theme that have played out given the kind of valuations that they're demanding? Do you think they look attractive at this point of time?
So, if you dissect the entire power value chain, you have right from, the power generators to the distributors to the equipment manufacturers, to the exchanges. So, there's lots to choose from. And my sense is that given the fact that our base demand, band today on a monthly basis is actually crossed 200 gigawatts. I mean, you had a peak of 254 somewhere in September, but 200 gigawatts is something which seems to be here to stay. And if the government were to meet this demand, from renewables and from conventional energy sources, there's going to be a huge appetite for new capacity creation. And remember, power as a sector is something which people don't worry about demand. There's always worries about pricing. And today, there was this news article on one of the PSUs, SVJNL, actually negotiating a contract with the Gujarat Urja Vikas Nigam at 2.63, which is fairly high. So, for a renewable project as well. So what's happening is that you still have meat on the bone in terms of, power, greenfield capacity expansions. The brownfield expansions are always profitable. So I would believe that you could still look at some of these names which are getting into renewables in a significant way. And from that perspective, long time back on our show, I'd spoken about a company called NLC. Which used to be called Neyveli Lignite Corp earlier. Now, NLC at that point in time was just about 100 plus. From that level in just, I don't know, less than 6 months, maybe less than 4 months, it's actually doubled. Now, the reason why that happens is that most of these companies start getting into a growth phase which they've not seen before. So the PE multiples start getting re-rated. If you ask me today if there's anything to be bought in a similar way, it'd probably be SVJNL because that is a company that's not only straddling hydro and conventional energy sources, but it's also getting into solar in a significant way. The portfolio in solar is growing so rapidly that it'll probably have a very good mix in terms of potential revenue. So I would believe these are companies that you look at, and at some point, if higher EBA becomes affordable and not so unrealistically expensive, we could look at that. But at this point, it still needs a little bit of consolidation. Just to let you know, our belief is while sectors and stocks are very clear, we are clear on what to look into buying. It's the timing or the levels that are more important. So everything's good at a price. And today the market is in a very exuberant mood. So you will not actually find even good companies being available at reasonable valuations. But at some point, if there's a trigger where the market eases off, that's when you get your checkbooks out. So that's the kind of market that we are in. So you're talking about the right sectors, right stocks, but probably not the right time.
Okay, let's also talk about Godrej Consumer Products, right? There is an upgrade report technically, or ICICI has come up with it's upgraded the counter to buy and also raise the target price. This talks about the integration of acquired brands, which is Park Avenue and Kama Sutra is largely completed for this one. Do you like this space? Do you like the counter? I mean, do you see further potential coming in for this?
So I think it's a promising space. It's not delivered yet as much as the anticipation around it or the expectation which are priced into the PE multiples. You look at any leading PE FMCG name, they've always been in the band of 40 to 40, 55, 60 kind of PE multiples on a trailing basis at least. Now, that is something which is getting difficult to be justified given the fact that the rural demand of the last 7 years has not kept pace with the way stocks have done well. And the reason has been that companies have managed to tighten their belts, keep their costs low. If you recall, about a year and a half back post-COVID, there was this huge UN cry on input costs going up, and companies reduced grammage, and made so that the price point would be constant, but the grammage was reduced. And at that point in time, whatever measures were taken to make the value chain efficient in terms of the input side, that continues to stay. And now they've started going back to the market with some sort of soft price increases or change in packaging and grammage. Now, that has started to reflect in margins, but not yet in revenue. The time to look at these companies will be when the revenue buildup is very, very clearly visible and very constant, or, is secular in terms of at least 4-5 quarters. At this point, I think they're still kind of sputtering around. It's not going to become a very smooth run. Nickey, what somebody could do is look at, if let's say Godrej Consumer is a good franchise. You've seen how Tata Consumer has morphed itself into such a formidable play, and given the right product mix. Godrej also can do that. It has the potential. Some of its acquisitions globally had been a bit of a pain point, but that's getting resolved. My sense is in the Godrej stable, if you look at Godrej Industry, which is more like a holdco, it has a lot of these businesses built in. That's where a lot of value lies. And if that were to be at some point restructured because of the salience of Godrej Consumer and Godrej Properties and the new Godrej Capital business that they've started off, it could be a very promising bet.
All right, point well taken. And it was indeed an interesting conversation this morning. Thank you so much for taking out the time and joining us.
My pleasure. Thank you.
All right, we have a couple of listing, like I suggested, RBZ Jewellers. We have Happy Forging along with that Credo. These are going to be 3 new candidates for listing, but expecting high amount of premium coming in for Happy Forging, at least given the kind of demand that we've seen. But that's all that we have in this edition. With this, it's a wrap, and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen, and for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.